There we go. So tonight we'll cover everything, a bit of everything. We'll start with some of the basics, and then obviously we'll look to put that in a chat. We're still getting more join. Um, but obviously, I mean, obviously, if there's regulars on, which there is, you'll know that obviously I believe that the market's always doing one of three things, which is creating liquidity, taking liquidity, and rebalancing the market. So I might even write this out. We might get a little bit professional today, Matt. A
Nah, I don't
text.
want to recognise it.
I know, yeah. Everyone will think someone else is taking. Yeah, so we
It's,
get more
it's
join.
someone else has taken over these live.
Um, so
What have you done with him?
yeah,
Oh, look at all this.
I know,
All these people, Lee.
I
They've got
know.
no idea what they're in for.
I'm hoping it goes really smoothly now. Everyone who's that joins regularly is used to fuck ups and winging it. So
No, it's not like that. They're going to learn some good stuff.
three rebalancing
They've just
Marky.
got to lose their fear of money, Lee.
That's it. Everyone's fucking poor and scared of money. So,
Yeah.
and the fourth one. Now, I always say there's three things that the market's doing, and then there's a fourth. So, but that's the market's not doing that as such, but it's something I've added in. So, and then there's market structure. Market structure. All right, so let's move this box out the way. Like I say, if it's going pretty well, I'll stay on a bit later tonight and try and get through a bit more. So, from creating liquidity, let's try and be professional. So the different forms of liquidity are equal highs and lows. I'll put a dash lows. Then there is trend lines, so trend lines. So with trend lines, I require a minimum of three touches. I'll go find you one in a minute just to show you. I probably won't show you equal highs and lows because I don't really look for them, and there's not actually that many about. So I like my equal highs to be pretty much bang on level, slight angle, and then I'll maybe accept a pipette or two. Any more than that, and it's a no go for me. So the reason for that is if you're willing to take something as an equal high that is a pip at a level, then why not two? And then if not two, why not four? If not four, why not eight? And so on. And then that will lead to going, well, you could say that any 2 points would be liquidity. So you could, let me just take my magnet off. You could say that one there and that one there is liquidity, obviously touch there, touch there. I mean, it might be, but for me and what I've tested, this two would be irrelevant. It doesn't hold any significance to me, which is why I like them to be level. So, like as I was saying, like if you're willing to accept a little bit of out of level, before you know it, you'll be joining these two as well. Why wouldn't that be liquidity if you accept a little bit? Yeah. So I like them to be bang on. It then, if you try and get everything to be as accurate as possible, so equal highs, equal lows, bang on level, trend lines, three touches and three clean touches. I don't allow the middle touch to be just past or just short. If I'm gonna, I'd like it. I'm okay with it being a pipette short of touching the line. If it's gone past it, it's a no go for me. But obviously, you could also say that um, your feed might be an issue. So obviously, I mainly use. I mean, this is Pepperstone because it's German 40, but all my forex pairs are FXCM, but forex.com or something the trend line might be very slightly different. So if one's slightly out, it's worth going and checking another feed. because it might just be a feed difference. So it might actually be a good trend line. Um, and then the other liquidity, let me just click on that box, is structure highs and lows. Right, so these are the three types of liquidity that I consider. I know others would add in their session highs and lows. I don't really think that that's proper liquidity. It's generally internal anyway, so and shit. So with obviously I've covered equals, we'll find a decent trend line. Um, which looks like there's a couple on here. We'll go with this one. Now it hasn't been taken this one, but as you can see, like it's bang on there. There's a bang on touch there, and there's a bang on touch there. Obviously, because it's magnet, I put the magnet on it, so I know it's touching these perfectly. And there's more as well. So there's one touch there. Looks like two touch, three touch, and possibly a fourth touch there. So I like my liquidity to be bang on. A couple more here, as you see. Like these wicks are bang on the line. That's the reason why I like it to be accurate for the same reason as with the equal highs and lows is because I want to eliminate guesswork from my trading. So if that middle touch was a little bit beyond that, like I say, you would then be saying it's maybe a two touch equal high and low, but it's just at a real bad angle. If it's bang on and pinpoint, it's not up for question if it's a trend line and if it's liquidity, it just is at that point. So it's all just about eliminating sloppiness basically and guesswork. And then the structure ones was where's my thing gone? There we go. Where's my right hand? Where's it go? Come on, move over. There we go. Must have been zoomed out. So structure highs and lows. So if you look at this red line, I'll turn it further opacity. Obviously, guys, if there's any questions, please just jump in and ask away. Obviously, I'm just talking as well. I can stop and answer anything that you're unsure about. So, if I'm in it, well, this is my 4 hour structure. So the same applies for the 15 and the 1 minute. Now, when I say these time frames, it's not you don't have to view these on them relevant time frames to see that structure. So I use them as a reference point because they're about evenly spaced apart. So this is dead boring, but so the 1 minute times that by 15, obviously you get 15 minutes. If you times 15 by 15, you just short like you're 3 3/4 hours, so I round it up to 4 hours. So they're evenly spaced apart that you can see the three different structures basically. So that's why I reference 4, 15, and 1. So as you can sort of see, let me just zoom out a touch if I can. Come out higher time frame. Jump on the 8. So we're talking 4 hours still, but obviously I'm on the 8 hour at the minute. So price is clearly bullish. What has happened here, obviously, putting a low. Its price is basically channeled up to this sort of price, all this up here. Let me just bolden that. So if you imagine that as a channel, yeah. So we get a big, long 4 hour structure leg. We pull back. It clearly is clearly pulled back here. Obviously, again, it's channeled. Pretty much if you draw a channel like this, I don't have to do this. Obviously, it's just for you guys. Go away. Right. So my rules for structure are pinned in the supply and demand section. So I'm not going to actually cover the rules for structure because you can just go and read it. I posted it. I think it's the last thing I posted or second to last thing I posted. Highly recommend you go and have a read of them. Um,
It's is that the ones that you sent me over?
I believe so, mate. Yeah, I
Yeah,
think
yeah,
yeah. Well, definitely, like I say, it's pinned in the supply and demand section.
yeah.
I think it was a couple of paragraphs. It's like four rules in it, I think. So, um, but the one I'm going to cover one rule just so you guys can understand what I'm talking about it as from a liquidity perspective. So obviously in a bullish market, obviously it creates this high and then we start getting lower time frame structures bearish, yeah. Now this isn't a bearish it's obviously it's bearish price action, but I consider this a pullback because when that 4 hour leg is made, obviously you can see this here. This I've got high and low marked liquidity. It's basically just a 4 hour structure high, basically, and obviously there's a 4 hour low down here. Now, this just mark that low there, turn it red as well. So in a bullish market, the lows that are created are obviously structure swing points. And we in a if it continues bullish, we expect the previous high to be taken. So obviously we create a low that obviously pull back from there. We create a high, we start to pull back. This lower time frame tells us we then retake the high. So the high is retaken here. Once this point here takes that high there with a level line, that confirms that this is the new low. Yeah. So what we can do from there is once we get so high and we start to pull back, we can anticipate that it's going to start pulling back and maybe obviously look for sells. It's obviously against the higher time frame market. But back to liquidity, is once it's passed beyond it, this is considered obviously liquidity because it's structure highs and lows, which is here, structure highs and lows. We can then start to look for order blocks in and around this high, obviously, because that's the liquidity point. So we can then say that something around here is responsible for causing that. So this is obviously leads it sort of leads into points of interest as well. So something let me just because it looks better, far better on a different time frame. So you can see there it's passed beyond. I think it's on 4 hours, quite nice. No, 2 hour. But it's 15. Try the one. Try the 15. Right, so here we go. So at this point that this price action is broken. So if I bar replay from the point that candle breaks past that high, so that one's there. What I do from that point is I come and find obviously the low from the area that I think caused it, and then I mark it to a relevant imbalance. Now, obviously, there's something going on here. This comes into play at a later date, but there's something a little bit closer here. There's some imbalance just in here. I'll just mark that for you. So there's a little bit of imbalance there. So anything yellow on my chart, I don't know if you can even see that to be fair. But anything yellow on my chart is an imbalance. So basically what we can say is like from if we're looking for bullish points of interest, now obviously I would always say mark from the wick low, usually to the first or the most major imbalance that's created. Now there's this here, but I'm not always keen on the ones at the very lowest point. It does come into play later on, which I'll cover a little bit later. But this is the first imbalance after this one's created, so I'm at my point of interest to the bottom of that imbalance. So what I always say as well is I always mark the bottom of the imbalance for buys. Obviously, it's the opposite for sells, but basically, I want the imbalance to be filled before I would consider taking a trade from any of these points of interest, purely because the market's coming to look for imbalance to fill. Obviously, when an imbalance is created, it leaves an order block, and obviously the order block creates an imbalance. So like they both create each other sort of thing. So the reason why I want the imbalance to be filled is because if it's half filled, I'm sort of going back to trying to take out guesswork from my trading. So if there's imbalance still left, price might still come lower. So I wouldn't buy above imbalance and I wouldn't sell below it because obviously price might come and fill that imbalance. So I'm always looking for imbalance to be filled. And then that takes us sort of back to obviously the market's always doing one of these four things. So obviously it can create it. It takes it obviously because it passes beyond it. Obviously, once it comes to rebalancing the market, and then obviously we've got market structure, which was just sort of slightly touched on. But yeah, never, never be taking your orders before the imbalance is filled. It's highly dangerous, in my opinion. And obviously, you wouldn't want to sell before liquidity is taken. So let's move back. So that's obviously creating liquidity covered. Taking liquidity is just passing beyond it. So obviously, once it passes beyond it, that's liquidity dead. The manipulation usually happens obviously just before the liquidity is taken. So that's what the market's doing. They're just trying to take liquidity, people's stop losses or orders or money or whatever you want it to be. After it's done that, obviously it generally comes back to rebalance the market, which is why I said I wouldn't want to be. Obviously, that's why I mark my points of interest as for filling the imbalances. The same applies for my entries. I want the imbalance to be filled, and the point that the imbalance is filled is my entry trigger point. And then obviously, if you get the right entry point, now I take things on the 10 second, so I'll show you a bit later on. But the real imbalance is on the lower time frames 95% of the time. It's very rare I look at a chart and a trade and go, I can't see what that's filled. It does happen. Again, that could be chart feeds, like FXCM might be shit. Forex.com might show it, It's just what we're dealing with. So the reason for this point of interest, as I say, is it's directly responsible for this major high 4 hour time frame being taken. I'm gonna just come off bar replay and then I'll just get into obviously I'll cut back to them sort of four things again and as to what we can wish to see from them. So point of interest is created after liquidity is taken on this occasion. Now, there's two ways of looking at this trade. It's the same trade, but you can approach it from different ways. So now, if you're looking at it from a continuation point of view, this area takes the liquidity, this high, comes back, it mitigates the point of interest, and then continues breaking to the upside, which is you see up above here, obviously because it's we want a lower because I'm on the 4 hour and it's obviously a 4 hour move. We want a lower time frame structure break in the direction of the trade we are going. So 4 hours bullish, we want to see ideally a 1 minute or 4 minute break to the upside. So as we see here, it's trending down. We get little structures going on. I'll turn magnet off again. So get a high, putting a little tiny low. There's that one there. I'll turn this color in a minute so it's a bit easier to see. Let's go green because I've got it marked as one. So as you can see, so from this structure that's created up here, on the way down, we started getting a smaller structure. So I had this originally marked as a 15 minute, I think, but I've got it marked as a 1 right now. It's not that important. The important is obviously you can see this little structure. So if I just turn I'll go down to the 15 so you can see that structure a little bit better. There we go. Don't know if it fit on screen. That's one. Get on. There we go. So now we're on the 15. Hopefully you can see that a little bit cleaner. Now, the same rules apply for this as all the time frame structures. So obviously as price is going up on the bullish side of this, so there's an up push and then there's a down push. The rules are the same. So we have in the bullish price action, we get the there we go. So we get a little change of character in here. Very obviously because there's a liquidity line here as well. The sell's an option because obviously I'm quite experienced. I might have spotted that at some point. But on the bullish, obviously the lows are staying intact. So when the lows are being created, they never get taken until obviously it retakes the high, retakes the high. Obviously that one there. But yeah, in the bullish leg, we start taking low. Yeah, we start taking the lows. So low's taken there, low gets taken here. This low gets taken with this price. Obviously, it comes down here, low gets taken. So when we are looking for when the higher time frame is bullish, the 4 hour like we just spoke about, we get the lower time frame structure up to the point of interest is bearish. Now, you might think why do we wait for a 1 minute break to the upside? Because from this point here, if it doesn't show us bullish intent, so lower time frame structure breaks it up here, gives us my final signal. If we don't get that bullish signal, what we might do is we might just pull back somewhere into this price action in here and then continue bearish. Yeah. Because obviously we're still bearish at this point on the green structure. So we're waiting for the lowest time frame to tell us that it wants to turn around basically and continue with the higher time frame. Now obviously this takes time and patience, but once it obviously comes into the point of interest from this point here, I don't even think I've got bearish horizontal way. So from that point, well, I might just do the right actually. From there, these sort of candles here take the lower time frame high. So from that point I would say you are well within your rights to decide that you want to take a trade, a buy from that zone there. No extend right. Turn that green. Well, a bit much. Green. Yeah, so at that point, now that the lower time frames aligned with the higher time frame, as soon as that breaks above there, so obviously you would set an alert on that line there, and as soon as it breaks that direction, you would say the two time frames have aligned to go bullish. This is possibly the new lowest point in the market. So you're well within your rights to then decide it's going to pull back into something in this price action here and buy up. Now, I can't remember. I'm not going to spend loads of time on it because we'll do a bit of it. We'll do a bit of it later on a proper markup. But as you can see here, we get a couple of chances here. The price comes in somewhere in this price action here, fills an imbalance. So it looks like this one here fills this market open gap here. So that's the point in which the market opens filled, the yellow line there. Obviously, you see it tags it there, fills it, and then reverses. And it also it looks like there's something else down here. Does it tag it? Comes away now. That one, whatever that is, anyway. I remember looking at this one, to be fair. It was just shy of my entry, I think. So it comes for something in there. Now, obviously, we're on the 1 hour here, and I would normally be looking at this on the 10-second, trying to find a tiny little imbalance. But for the sake of this, at that point, I would be looking for an imbalance on the 10-second to find an entry. I'm just trying to blitz through it a little bit because I know I've got a lot to actually try and cover. So that's one way of looking at the trade. Obviously, for the continuation, you could also, I'm just gonna darken that one down a touch. So the reversal aspect of that trade, the confirmations are about the same, apart from if you don't take into consideration the structure high as the liquidity taken, we also create a trend line here. We sweep it and then we break to the upside. So it's the same idea. It's the same. It's just that, as you would say, is obviously after the sweep, you would be looking for the breaking structure in the same direction, and then obviously afterwards we come back and we mitigate. We basically mitigate the sweep. So trend line here, it's the important. So we pull back. So that there is your manipulation. And then obviously, like I say, we break structure in the direction of that we want to go. So that's major important. So obviously this is the break in the direction is basically lower time frame structure confirmation. And this is, I think, if some of you are from the gas section, I think I posted on Friday maybe saying what it does after the liquidity is taken. So liquidity is taken here. This is a liquidity. Just thicken the line up. That's the liquidity. As soon as price passes beyond it, we come back to structures, and what it does after it's taken is basically what I believe the market direction is going to be. So here we see it break to the upside. Obviously, we just covered this a minute ago. If it didn't take this high, what I would expect to see would be a further break to the downside. So manipulation happens here. If we'd pulled back into there, let's say filled an order block in there, I'd wanted to see a break to the downside, then another mitigation. So the reverse of it would be, I'm going to turn this darker as well, just so you can see it. So if it was going to continue lower, obviously with the actual structure that we drew earlier on, the bearish structure, once it took liquidity, I'd want it to fill an imbalance somewhere in this leg. Oh, where's that? Let's do that there. Make that dark, actually. So a continuation to the downside would have been fill an imbalance, which is this. Go away. Stick it on that, actually, it's fine. So yeah, we pull back. I'd have wanted it break this low again, and then I would have considered an imbalance in this for a sell. But obviously, we don't re-break the low here after it pulls back a little bit. So at that point, and that point become the major high and lows of the 1 minute structure. And as I say, these two points are the fixed points for the structure. So that one gets broken, we buy. If that one gets broken, we sell after this little pullback, obviously. And then, like I say, we further down the line, it comes and does its thing, fills an imbalance. So that's that bit covered. Just delete some of this shite now. So, just while I'm clearing charts, does anybody want to tell me a good reason for a point of interest that we've just covered? See if anyone's listening. Anybody? No?
Thanks, liquidity.
That's the one, Matthew. Thank you. Taking liquidity. That's why I'd mark this one, because it took this liquidity. And also, obviously, we build liquidity here and it taps into that as well. So technically, it's all linked as well. Now, I'm going to obviously, there's a couple of new guys on. If some of that didn't make sense, or if you feel like I've missed something, then please do speak up, because I'm just going to add a couple of notes to this. So basically a sweep. Yeah. Rebalance the market. That's fairly straightforward, I would hope. It's just obviously imbalance that gets filled. Imbalance gets
BONG
filled.
has visible imbalance as well, doesn't it? There's a little bit of consolidation and a push.
Yeah, well, yeah. I mean, I suppose I don't really ever consider consolidation.
I mean, what I mean is it spends time, a bit of time, a few bars in the same zone.
Yeah,
Yeah,
mm,
whatever you want to call it. But no,
yeah. I don't
that's what I
know
see.
what market structure. Yeah, I'm fairly happy with what I've covered so far there. Anyway, but like I say, if some of that, obviously from this, I'll come back to that in a sec, Matt. But from
Yeah,
all
it's not
this,
important, mate.
obviously, this is pretty much everything you need to know. So obviously, like I say, the rules for market structure in the supply and demand pin section. So this is pretty much, I believe, this is everything I use. Like, there's nothing more, I don't think. There's only a couple of, like, I don't believe in spread hour price, because I don't think it happens as such. It's like the market closes for that hour, so it just didn't happen. Um, so like the having these four things is basically, you just need to be able to put them in an order to effectively create a story. I didn't want to say create a story because everybody says it, but that's basically what you're doing. Obviously, it's got a beginning, middle, and end type thing. You want liquidity to be created. So that's this high. That obviously, th there's a little bit in between here. Obviously, you want an order block to be made, leaving imbalance. Um, obviously that comes under rebalancing market. So it creates an order block, takes the liquidity, comes back, rebalances the market. Does it give us a structure shift in the right direction? Yes, it does. It then comes back, rebalances the market again somewhere over here with one of these, if they whatever your entry is at that point. Like I say, there was two opportunities in this one. Um, you know, obviously again there we get another, obviously fill that with that one that was just shy of the box. It then breaks the market upwards again. So depending on, I mean, there's probably more liquidity in all this here. Obviously, there's a little trend line in here. We sweep, we then break to the upside, so we get another confirmation. Obviously, there's a bit of imbalance in here, which just about fills and then gives you some sort of reversal. So there's obviously plenty of opportunities. You just need to now. Obviously, I can show you all my trades, and obviously I regularly do. But this is basically all you need. You just need to put it in an order that makes sense. Obviously, the main things being obviously you wouldn't take orders before this like liquidity is taken. You won't put an order before the rebalancing of the market. So like I say, I prefer my entries to be at this point here when the market is rebalanced, because usually that means that the liquidity has been taken. And it's obviously for the liquidity to be taken, it had to have been made. So, and then obviously you're just hoping that if it's buys, then you're in the structure pullback rather than at the end of a run, obviously, because if you're at the end of it, chances are it's going to pull back and take you out at some point. So, um, and obviously this one here is quite is mid-range-ish, I guess, but it's a good sort of area. There's good reasons for it, as we just covered. So I think obviously we was talking about the imbalance lowering this point of interest earlier on. I think Matt. Now I said I didn't like them, but as you see here, I'll show you this actually. Um, Start new. Um, so as you can see, I think it's this imbalance here. So we get a big push up. Bearing in mind we're on the 10-second here. Right, so there's a good push up from here. This is all a little bit crappy, but I marked it. I mean, I marked this a long time ago. There's possibly a tiny bit of balance price range here. There's possibly a tiny bit of imbalance down here, but it's not as big a push as this one here. Um, so obviously and maybe even the minute it looks shit, but I'll take a look. We'll go through it. So looks these areas still look like imbalance, and on not this one, not this lowest one, that disappears on the 1 minute. Now I'm showing you this because this is why I believe the lower time frames are where the imbalance actually is, and this is why I don't believe, let's say, 5 minute imbalance is a thing. I don't think. Yeah. So if you look at this now, there's no imbalance here. There's no BPR there. This is just a candle changeover. It looks like nothing. Maybe now shows it's a bit of imbalance higher, but again, I'm assuming once we get even higher, this will all change again. Yeah, see, there's nothing there now. So this is why I say that the lower time frame. So I prefer the 10-second. Now there's often occasions where you can't even see it on the 10-second, but you can see it on the 5 and the 1. But I spend my time mainly on the 10-second when I'm looking for these imbalances. I I'd recommend obviously you're working your way down. So if I'm looking for an entry, I tend to start on the 5, because if I was looking for an entry on this area on the 5 or the 15, I'd mark this order block on the 15, and then I would eliminate and change it as need be. But it sort of like helps you pick bulker areas. So other than that, yeah, I don't really believe him. But if we focus on this imbalance, so this was the highest one and the best looking push. I'm just going to change to a higher time frame because it's quite a while ago now. This was before December, or before Christmas. But you look at the pinpoint precision on that. Yeah. You're telling me if you didn't have that as an entry, that tags you in, minimal drawdown. This is rebalancing the market. Yeah. Literally taps it. Is that market open? Well, market literally taps it before it closes for a couple of hours or whatever. But if like this is the point is I'm saying is this is why I use 10-second imbalances and things as your entry because here, if that had been your entry, like you'd have maybe just been tagged in there, so you'd have been 10, 20 seconds of drawdown and then it's left, it's gone. And then obviously, and I wouldn't obviously advise taking a trade at that time if it's closing, but you get the idea of why imbalance is what I actually think the market's generally coming to do and reversing from. So obviously, an order block created this imbalance. It's the lowest. I think it's the actual lowest real one in that leg that we looked at a minute ago. And as you can see, it's filled it pip to the pipette pretty much. And then I think from there it's gone. It's just I think he's done all-time high again pretty much from there. So don't know where we're at to be fair. So that's the touch there. Yeah, pretty much this full 4 hour leg. You can pick that point of interest and everything. That imbalance is the new 4 hour low, and it does all that from that one little imbalance. Yeah, we get all this. What's that? 20th of November. Just under a month worth of bullish price action from that one little imbalance down here. So obviously from that, like you could say, I've shown you a good reason why you would pick that zone because it took liquidity. You could spend time marking them little imbalances if you really want to, but obviously you still want further confirmations. So we, I think a few of us took a loss on this trade from here earlier. Similar reason for point of interest. I think it was a good trade. Obviously, it lost, but you know what you can do. Can't win them all.
We're not talking about.
Yeah, don't want to talk about it, Lee. Shut the fuck up.
Yeah.
But yeah, it's one of them, mate.
I know we picked that one, Luke.
Yeah, well, it was just on my screen. I was readjust before live. I was readjusting the structure because I had like a load of 15-minute structures in here because I've not updated it in so long. So I've just I was rearranging it properly, sort of thing. So what I think is going to happen from here. Now, this is purely just a prediction at the minute, obviously. So we've had a pullback. Obviously, we've had a new 4 hour high put in. So what I'm thinking now is we are looking at a 4.15.1 move. So obviously 4 hour point of interest is the red one. We've just covered the imbalance. It's filled the lowest imbalance in that 4 hour point of interest. So I think we've got potential for somewhere from that low. Now I'd have to look at all this, but we've got a 15-minute point of interest that's been created. So for the lads that know and understand the 4.15.1 sort of setups, now it's obviously taken, this is a 15-minute high because we've got 15-minute swings. Yeah, a couple of 15-minute swings here. High, low, high, low. Yeah, so 15-minute high also marked there on that as well. And so I think price is possibly coming back. So I often say 20, the bottom 25% is ideal. So what I've done there for the newer lads, I've just drawn a box that marks me top and bottom 25%. So this is the current 4-hour structure legs at this low here. Let me zoom in so you can see it a bit cleaner. So from this leg, this wick low here to this wick high here, the green is my bottom 25% and the top 25%, and this middle section is what I would call sort of danger zone. And we all obviously we was all trying to buy from that this week. But since I've moved my structures, I think we're going to come a touch lower at least. And I haven't really looked why. So there's a good chance it's going to come in this. If I roughly mark it up, I don't know yet. I'll need to spend more time, and I'm not going to have a chance to do it tonight. But there's a decent bit of imbalance here. It takes a lower time frame high. There's possible equal lows here, sweep, so it might come a little bit higher. But all we can do is just make obviously rules as to and reasons why we think it would come so low. Looks balanced on the 2-hour, so maybe not that low. Wick down. Maybe something in there. You want to do that? Don't know. Don't know at the minute. I didn't want to get into looking at live setups, to be fair, but here we are. Spend a couple more minutes looking at it, and then I'll move on to look at another chart anyway.
To be first job tomorrow morning, got the day off, so I'm going to have a check, see what's up
Yeah.
there. I haven't looked at the charts all weekend because I hate
Yeah.
myself, so I've had a few
Uh,
days off.
yeah, it's not a bad thing, mate. So that's filled, so I don't think it's coming quite this low. Pardon me. Don't really. I'd maybe check that wick. That might fill what's in that wick, to be fair. Maybe get a little something there, a little shite. Basically, what all I'm looking for is just some decent imbalance to suggest where it might come to something substantial. I'm not seeing it at the minute. Not taking there. Plus, I need to clean my charts out, so fills all the way back there. I'm going to give it up as a bad job at the minute, but not up to that area where it was anyway. Already come lower than that. So we're down here, aren't we? Somewhere in this minute. Was that created equal lows? No. Yeah, I'll give this up as a bad job at the minute. It's a spread now. This one here, maybe. Not there. So see where that goes. Shit, anyway. What I was hoping that that was still to be taken, because then that will give reason to drag it lower. We might now create something though. God. No, no, it's. I think that's possibly coming here now. Anyway, it's probably the next best area I can sort of see. Now, obviously, we get a bit of a back. So on the 15-minute structure, the same reasons as why we all marked this anyway. Technically, this point of interest, if we stick with a 15-minute, obviously, structure, obviously, we've got a structure going on here, then it can do it anywhere in this still, all this price action, and it's still in there, obviously. So that might be a good area. Yeah, I'll keep an eye on that this week. So what I'm gonna do, lads, is I'm just gonna go and pick a random chart. Don't really mark this up, so let's have a look. Beautiful, beautiful. So now, obviously, I think this is played out. But what I want to do is I've got a blank chart, so I want to basically go about it how I'd pretty much mark up a chart if I was watching it live. So, oh fuck off! What the fuck is that? So obviously we can see this is clearly bullish. I'm on the 4 hour at the minute. Was it the S&P 500? The structure wise, now this is a little bit on the messy side, but we clearly get a bit of a pullback here, and then we sort of get a pullback here. So if you was to say, look at the charts at that sort of point, like you could identify this is pulling back, it's taken a low. Now it don't take any more, but let's should we turn up a magnet? We've got something like this going on. Could say that it pulls back. We would anticipate another leg. Something like that. Whatever time frame you want to call it. I'll just do it orange for now. So now once this is pulled back, so this is a crutch. This might tag an entry in for all this for whatever, but I'm one what happens from here. So if you was to open the chart at that point, now you obviously you could just come on the lower time frame, and if that's filled something in here that you're happy with, you just take a buy from there because we are bullish, majorly bullish. Obviously, we've gone through a lot of the chart and just seen that it does go up. But obviously we're trying to go and recreate conditions to be as close to live price action if it was live. So we're basically looking at forward testing. So we've pulled back here. Now I'm going to play a few candles just to get us going. Yeah. So what I'm going to do is wait until it retakes the high because it'll take it in a minute. So now that we have or about to take the high, there we go. What we can do from there is we know that this is the new low because it's retaken the high. From there, like I said, I'm not going to get down to the lower time frames here. I'm just going to mark it out and tell you roughly what I would be doing. And then if you want to go and do it, you can do it. So this is the high, obviously, that we marked. It pulled back. It then retakes the high, obviously, here. So what we can do with that is we can just mark a point of interest for now. Yeah. So as you can see, from the point that it breaks, this is the lowest imbalance here. Obviously, this is the wick low. This is it's just a 2 hour imbalance. I'm just roughly marking it. And then what we would be looking for from here is price to come back. What I want to see is, obviously I don't know how high it goes. I have no idea, but what I want to see is a little nice lower time frame structure like this. Obviously, I wouldn't want it to go back in time, but yeah. And then I would want it to hit this point of interest, and then I want to see a break to the upside to confirm an entry. Yeah, because we know it's bullish. The orange time frame. Obviously, I'd want to see like a. This is what I'd class as say my 15. This orange one. I'm going to turn this green in a minute because that's what I want to see on like me 1 minute. So I want to tap that. Once it breaks to the upside, that would be confirmation to then go, yes, I'm buying, and then I would come and look for an imbalance to fill in there as an entry. So the pullback after the break is the entry fill, and then obviously you'd want it to just do something like that. I've got a question, just bear with me, guys. Yeah, cheers, Andy, mate. Thank you. So from this point here, obviously, if you was live conditions, I would just say set an alert on the top of the box, because then when you open the chart, you would the alert goes off, so price would be say here. You would then look at the lower time frame, mark your most recent 1 minute high that you wanted to be broken. You could also set an alert just past the point, so in case it makes another swing low but stays in your point of interest, you want to keep your eye on that sort of thing. So obviously set alerts top and bottom, just to see it, just until you get the result you want, or the zone fails. Right, so we're forming lower time frame structures. Yeah, so there you fucking go. Pretty much bang on here, lads. Yeah. We want that to hit that though, because it's irrelevant until it hits the point of interest. Nope, didn't have it. Or did it? I'd be checking that on the lower time frame, see if that imbalance is filled there. But at the minute, if you was happy that it filled a lower time frame imbalance, you'd be wanting to break above that before considering an entry. I'm not going to check the lowers. Like I said, I'm not too fussed about it. I've shown you that obviously the imbalances on the German 40, and it's basically the same thing. But I'll leave you guys to figure that out. So fucking know what happened there. So didn't break the 1 minute high, as I said, obviously because it's zigzagging down here. Didn't break it. Made a new low, new structure high you would want to see broken is that one. Like I say, because it's obviously that didn't tap in, it seems. It's come, I'm assuming that's come for what it wanted to do. Obviously, that's the wick low. So this is the strong low in a bullish structure. I'm assuming that's taken the last thing that it wants to. Just come on the lower time frame and see what's going on. So that's still a 1 minute high. If you was being really aggressive, really aggressive, there's a substructure going on here as well. So you could argue that Obviously, like I say, if you're really aggressive, you could make a case that this is your entry here. So this would be your aggressive 1 minute break structure. So as soon as that candle's, if you was following it closer, now this is obviously just me marking things up quick to show you the process. So I'm hoping people will be able to watch it back and just go, right, there's a reason for a point of interest. The structure's in the certain direction. After it breaks a certain structure point on the 15 minute, obviously make a reason for making the point of interest, which is the wick low, and then the first clear, decent imbalance. You might be supported with liquidity as well. I don't think it was on this occasion. I hadn't checked, but just from a structure wise, it's in an ideal place to buy from because it pulled back. I mean, obviously this box here is the wick low, so it's pulled back 97% ish, 95%. So buys are if you're anticipating buys, buying this low in the pulling back this deep in the previous structure is like your chances are pretty damn fucking good. Let's be honest, as long as you get the right entry or whatever. But I mean, coming back this low in the structure would make me moist. So you could argue that that is your first aggressive entry. Yeah, huge imbalance. Like I said, I'm not going to check the seconds. I'm just going to leave you guys to go and decide if there's an imbalance there. Something clearly happens here. I'm assuming there's an imbalance in it. But like I said, I think I would have had mine still up here as well. So I'm assuming there is still a second opportunity to get in because I would wait for that one, I think, unless I was being super, super aggressive. Now, if you're sure, take the more aggressive one. Moist is the word, yes, fully agree. So I'll delete that one and then we'll focus on the high one. Obviously, the line's already there. Same again, same principles. If it was, obviously that there was a break we considered there, we'll just wait for that one to be taken. I can't remember. I don't even know if it does it, to be fair. I'm thinking it takes a high, but whether it gives an entry or not, I don't know. But again, I'm not going to pick an entry. I'm just going to say somewhere in here it'll come back for an imbalance. I mean, we could take a look, but I'm just going to turn the time frame up just to speed it up a touch. Yeah, come on. Right there. So obviously a late would have gone off there. From there, I'd be saying there's something in all of this price action. Now, I won't anticipate coming lower than this one because obviously that's clearly probably filled the lowest imbalance, I think. So all of this price action here that's live is where you would find an entry. Now, anything above that, all that price action's dead because of this wick. I don't think I need to tell you all that, but obviously that wick low there cancels out all this. So anything that's live at the point that it passes the 1 minute break that we was looking for is more than likely the price action we're looking for. So this is just off a quick glance. So something happens in here clearly. These are sort of just the quick areas I'd be checking myself on the lower time frame. Maybe in that, but I'm assuming something more so happens in there. And then obviously, like I say, it's you check all of this price action anyway. That's the point. They're like the three areas on the 5 minute that sort of stand out. So basically, like I say, if you guys want to check this tomorrow and just see if it does, you could feel free. But I would be saying like one of these three areas is most likely that's going to get tapped in and then buy up and continue its structure. So I'm just going to cancel the bar replay and just see if one of them gets touched in. But obviously, this shows it can be done. Something can be done without the seconds charts if you don't have them. Now, see, just higher than one of my zones. So that's what you're gonna do, eh? But let's have a quick look and see what that taps into. Like I say, I marked it on the 5 minute. I'd normally be looking way lower. So, but again, the point is it tapped into something below this. The point it breaks the 1 minute high. So that point there. Let's check, see if we can see out. It's going to be one of them that doesn't show shit. So let's tag whatever that is there. So I don't think I'd be seeing this myself either, which often happen. It does happen. It's not. It's not perfect, but obviously you can see, we get some form of push from here. There's a decent little push. It's tapped into whatever that is. So but I don't think I'd have picked that myself. I'd have probably been a lot lower, I guess. But this is obviously the thing. It's the imbalance fills are as close as we will get to. I don't want to say perfection, but it's the closest indication of. Yeah, I'd have been down here, I think, with these pushes here. So I think my alien was right. Obviously this might still be live as well. There's no until it's taken out or it clearly fucks off and never comes back. There's a chance that these are live. Decent pushes down here. Imbalance here. So I'd have definitely been low. I'd have missed. This would have missed me. But the point of the whole thing was obviously it's after the structure break in the direction price like it's coming for something there. That's the 1 minute break in the direction is your final confirmation that it's just going to pull back into something and then continue. And that is that, guys. Luke's next in. Yeah, some of that might still be live, to be fair. So structure-wise, I guess was quite off as well. Obviously, it pulled back so deep. So if that's the structure at the minute, I mean, obviously we could go quite a bit higher still. I would say that one of these a bit lower is a possibility until we pull back, and it's like if we pull back into, so I don't know, let's say there, and then retake the high. If we get a clear break and then another bullish swing, at that point I would say that this is wrong. Like these was just the wrong entries. But obviously, 15-minute leg, we will pull back at some point. One of these might also be the pullback, but I don't think they are. I think this is a whole continuation. So I think this is going to be. So see, I had my 1 minute marked up here. Where's it? It's 10. So let me just turn that darker so you can see. Cough. Right, so this is what I think it is at the minute. So the lads that are joined regularly will know what I'm sort of showing here. So that. No, that's wrong. Yeah. So this is the lower time frame. This is what I would call my 1 minute at the minute, and this is obviously the 15. So the 1 minute makes up the 15. So one, two. At the minute, we've had three bullish lower time frame swings that make up the medium time frame, and we had one, two, three bearish swings that make up the 50. The three bearish lower time frame swings make up the medium time frame pullback in a bearish overall market. So I think this is lower time frame. Like I say, I think we might, like I said, he's live because once the 50 pulls back, it could tag an entry and then continue its 15-minute long, or it could just blow through. That's the risk we're sort of taking. So ideally, would have had this and it would have got us in straight away, and we could just go at TPs beyond this high at some point. So the TP for that, like I say, would be above this high at some point. Obviously, you could continue if you really wanted to. There's nothing higher than this, so there's nothing to go off other than structure. So obviously we're bearish, bullish, lower time frame in a 15-minute and 4 hour bullish market. The safe option would be just beyond this, and then obviously, I mean, I would have said below. Once it pulled below that one, I'd have been because I would at the time in a live market, I would be thinking that from that point, it retakes the high because it takes it there, pulls back, makes another high, takes it. So at that point, I would be thinking that's the 1 minute break to the downside. It then retakes it. So that's one rule for what the structure that is what it does next determines the previous. So, like I said, I would have thought that was a break to the downside here. I'm assuming we all would have, but then it retook the high again. So at that point, this structure, obviously that we thought was a low at the time, as I just marked this, so pull back, new high. This structure gets rearranged to that one because it retakes the high. So what it did next after that, what it does next is what confirms the previous. So if you was like say if you'd have caught that one, or you would just be, I would just say if you want to try and take the maximum from it, you would follow the lower time frame structure. Like I say, I'd have seen that, and then I'd have been getting out of this mitigation up here, possibly. So that's about it, guys. We're well over the time, so unless there's any questions, I'll call it there.
Uh,
Did a lot
Good
of
mate,
talk.
cheers very much.
Cheers, guys. I did a lot of talking then, so thank you
I'm
very
just
much.
trying to get my know the structure, so it's good to see it.
Yeah, like I say, the rules are in the Discord, mate. Like, look over them.
I've got
If
them on my documents now.
yeah, what I would say is, mate, is copy and paste them, even if you put them on your screen, and just like mark it out and just try and use the rules to. It's like because the rules don't really fail with structure. Like, there's a couple of rules in there, like that last one that sort of like helps you correct it if it's wrong, you know. So while we can get it wrong as we're marking them, the rules allow for you to get it wrong and then recorrect it for the next swing. But yeah, obviously the if it's bullish, the high and low of the confirmed high and low is the live range. Obviously, if it's a bullish market, you'd be then expecting the high to be taken again at some point. So we want to ideally get a deep pullback, look for confirmations. If that's a lower time frame thing, you'd take the buy, mate, and yeah. But once like structures, there's four rules for it. I think there's four, three or four. They're quite simple rules, but structure's probably the hardest thing to actually figure out and learn. But once you get it, like the potential is mega.
hmm
Because if you can catch the bottom of a 4 hour leg, like you're talking, I mean, you're talking a month of price action in the direction of your order. So, and then if you can, obviously with that German 40 imbalance we looked at, if you can get an entry off of that like a 3 pip stop loss, but then you've got like say 30 days of bullish price action, like the risk to rewards can become insane. So assuming you don't shit your pants once you get into a bit of profit, obviously, and go break even. So, you know. Right, I'll call it there, guys. I'll be in the Discord. So if there's any questions, just fire them away. I'm always got my phone in my hand. I'll catch you all in the week. Cheers, guys. Thank you.
Yes, thank you.